Hello and welcome to our May Dairy Market Update. In this edition, we'll be looking at how production costs and profit margins of Great British dairy farms have performed over the 2017-18 season. Average milk production costs increased by 1.1 pence per litre in 2017-18 compared to the year before. This is based on our recently published dairy performance results, which look at costs and margins from around 350 GB dairy farms, with financial year ends falling between December 17 and June 18. The biggest contributors to the rise in costs were feed and forage, costs of which increased by around 6%. Costs also rose for bedding, paid labour and repairs to machinery and buildings. It's worth remembering, though, that the period the data covers included a particularly challenging winter for many regions across the country. Despite rising costs, the top 25% and middle 50% of farms made a positive full economic net margin in the 2017-18 year, whether they operated an all-year-round or seasonal block calving system. Full economic net margin takes into account all costs of the business, including less visible costs like unpaid family labour, depreciation and the value of owned land. It's worth bearing in mind, though, that the GB average milk price for the year was just over 1 pence per litre higher than the long-term average milk price. However, the top 25% of all year-round and seasonal block calving herds had full economic production costs below the 5-year average milk price, making them more likely to weather any future volatility. It's also useful to look beyond Great Britain and compare performance with farms abroad, whose produce is in direct competition with GB milk. When comparing internationally, overhead costs for a typical UK farm are mostly in line with the 10 most profitable farms from key dairy exporting countries. However, UK farm machinery costs are closer to those of the bottom 10 farms in other dairying nations, negatively affecting the UK's competitiveness. So, how do the top farms achieve their bigger margins? The largest cost drivers for the difference in net margin between the top and bottom farms in Great Britain were herd replacement costs, power and machinery, unpaid labour and feed and forage costs. The Dairy Performance Results 2017-18 explore these areas in more detail and aim to provide some starting points for farms looking to improve their financial performance. If you'd like to take a look at the results, click the link below.